Hello students, in the present lecture we are going to learn verification of various items. In this lecture, firstly we are looking verification of bills receivable. We know very well that bills receivable is an asset. While verifying bills receivable, the auditor should consider the following factors. We can analyze that while verifying any kind of asset, there are certain points that should be noted by the auditor, and that is the part of verification. While verifying the bills receivable, the auditor should focus under mentioned points. The auditor should compare the schedule of bills in hand at the date of balance sheet with the bills receivable. If the bills receivables are more at that time, it is necessary to obtain a schedule from the client on the date of balance sheet. It means that balance the period of audit should be taken into consideration, and then that schedule should be compared with bills receivable book. Bills receivable in hand should be verified physically and see the details such as name, date of the bill, date of maturity, stamp amount, etc. From this point, we can observe that the particulars are to be mentioned on bills receivable. So auditor should see physically these bills receivable. The auditor should confirm that if the bills have been made subsequent to period but prior to date of audit, the same should be traced through the cash book. So cash book is also helpful for verification of bills receivable. If the bills are lodged with the bankers for collection, a certificate should be obtained from the bank. That is also known as bills for collection. So bills sent for collection, and for getting complete idea about it, the auditor can obtain a certificate from the bank for the bills those are sent for collection. The auditor has to check that bills discounted or endorsed but not matured are properly accounted, and contingent liability is shown in the balance sheet for the purpose. Bills discounted and bills endorsed checking is the responsibility of auditor, and also auditor should focus the bills discounted or endorsed but not matured are properly accounted. The auditor should confirm that a proper reserve is made in regard to overdue bills. The auditor should also check the doubtful bills charge created if any and statement of bills sent for collection. There may be sometimes bills which are likely to be dishonored or which are likely to be doubtful. So auditor should note that fact. The auditor should see that bills dishonored are recorded correctly. Now we are going to discuss another item, that is another asset of verification, that is called as verification of cash at bank. Cash in hand and cash at bank, these are the liquid assets. Cash at bank is also known as bank balance. While verifying cash at a bank, the auditor should consider the following factors. In verification as well as in vouching, we are looking that while vouching or verifying particular asset or liability, certain points should be noted by the auditor. In case of cash at bank, the auditor should consider the following points or factors. The auditor should compare the balances as shown in cash book with the passbook. It is, it is, it is useful to get idea about the cash at bank. The passbook with the client is compared with the bank columns. The auditor should verify all the items of bank reconciliation statement thoroughly because there are chances of misappropriation. So the auditor should be very careful while checking the bank reconciliation statement. Make all the necessary inquiries and check all related documents and correspondence. Mostly we found that frauds are occurring in relation to cash. Therefore, the auditor should be alert while verifying cash at a bank because it is easy to make fraud of cash. There are three types of frauds, that is misappropriation of cash, misappropriation of goods, manipulation of accounts. So in order to avoid such kind of misappropriation, especially cash misappropriation, the auditor should verify cash at bank balance very carefully and documents in relation to cash at bank and correspondence regarding it. The auditor should obtain different certificates from banks for different types of accounts like current account, saving account, fixed account, overdraft account or cash credit account. Saving account, current account, fixed account, also called as current deposit, saving deposit, fixed deposit. So with the help of these, we can auditor can understood the balances on various accounts as well as overdraft accounts or cash credit. The auditor should obtain a letter of confirmation of bank balances directly from banks. The auditor has a right to get clarification regarding cash at bank. For that purpose, the auditor should obtain a letter of confirmation from the particular banks in order to get idea about the cash at bank of the client. If there are more than one account with the same bank or more than one bank, all accounts should be checked very carefully and see that all balances are taken properly. Such kind of situation may occur. It means that with the same bank, the client have more accounts as well as one account is also maintained in more than one bank. So for that purpose, to understand the exact balance of cash at bank, the auditor should check carefully balances and note the properly that fact. The auditor should see that checks not yet collected are genuine and made up in order to conceal the deficiency. Checks collection period now limited to 3 months. So The auditor should see very carefully that checks not yet collected. The auditor should confirm that if any account shows overdraft, it is not adjusted in the debit balance in other accounts, but it is shown as liability. Overdraft is a liability, and the auditor should confirm that overdraft is shown as a liability in the balance sheet. Fixed deposit with the bank can be verified with the counterfoil of bank challenge, certificate of deposit, or from statement of bank. There are three aspects of checking fixed deposits balance or fixed deposit account with the bank, namely counterfoil of a bank, that is one point. Second point is certificate of deposit, and third one statement of the bank. These are the documentary evidence. With the help of these documents, the auditor can ensure about the fixed deposit account with the bank. If payments are deposited in foreign banks under exchange control regulation, it should be verified by the auditor. Foreign exchange or control regulation is in force if the payments deposited in foreign banks. For that purpose, the auditor should check carefully exchange control regulation regarding this. So in this way, we seen that what are the points should be taken into consideration by the auditor while verifying cash at bank. So in this way, we discussed the two items of verification such as verification of bills receivable and verification of cash at bank. Presently, we are going to focus another asset, that is cash in hand. For that purpose, we are concerned with verification of cash in hand. Cash is a liquid asset. Cash is in another way, cash is known as money. Money makes a problem. Money solves a problem. So money is the central point of causing something. Therefore, verification of cash in hand means to check the reality about the cash in hand. The auditor should confirm certain facts because there is a great scope for misappropriation of cash. The secondary objective of auditing is to detect and prevent fraud at early stage. So, auditing is a skillful and tactful work along with intelligence. The auditor should verify carefully cash in hand. What, what items are included under cash in hand? There are certain items which are included under cash in hand such as cash balance, petty cash balance, balance of stamps on hand, cash and cash in transit, cash with agents, etc. These items are covered under cash in hand. While verifying cash in hand, the auditor should consider the under mentioned points. While verifying cash in hand, the auditor should confirm exact truthness of cash in hand. The auditor should note that what are the points covered or occurring under the head cash in hand. Under the head cash in hand, there are certain items which are occurring, namely cash in hand, cash in transit, cash with agent, petty cash balance, and balance of stamps on hand. While verifying cash in hand, the auditor mostly focus on the following points. The cash in hand will be physically counted actually on the closing date in one sitting. Physical verification of cash in hand is very essential. While verifying cash balance, the auditor should organize surprise visit, or the auditor should check and count cash in hand balance on one sitting. If an auditor is not in position to attend the actual counting of cash on the closing date in one sitting, he should physically count it later on the earliest date and check up all the transactions from the closing date to the date on which the cash is actually counted, and compare it with cash balance in shown in cash book and balance sheet. There are two documentary supports for verification of cash in hand, namely cash book. In cash book, we can get idea about the cash balance. So it is the duty of an auditor to see that whether the cash in hand balance is correct, and it should be physically counted by the auditor at the closing date. If it is not possible to an auditor to attend closing date, then the auditor can count physically cash in hand, and compare this with cash book and balance sheet. Balance sheet is a statement of balances which shows balances of asset and liabilities. Therefore, cash in hand is an asset. If different cash books are maintained, such as cash book for counter sales, cash book for sales through agents, all such cash books as well as petty cash book and main cash book should be verified simultaneously, so that shortage of one account cannot be made up from the excess of other accounts. From this point, we noted that the cash book may be maintained at different levels for different type of transactions. In case of counter sales, a separate cash book is to be maintained. If the cash book is maintained for sales through agent, that is one another type of maintaining cash book. PT cash book means the PT expenses are and PT receipts are recorded in PT cash book. And main cash book, it means that there are three supporting cash books to the main cash book. While checking main cash book, the auditor should also check PT cash book for counter sales, and cash book for sales through agents. So it is possible to an auditor to see that excess balance of one cash book cannot be adjusted to another one, and the auditor can get complete idea and exact idea about the cash balance in hand with the client. Counting of cash should be done in the presence of cashier and a responsible officer, and a note should be prepared accordingly, duly signed by all of them. Shortage or excess of cash should be taken seriously. This is very important point. While counting physically cash balance or counting cash balance with the presence of cashier and responsible officer, the auditor should obtain a note signed by them, because sometimes there may be shortage of cash or excess cash. So to avoid such kind of situation, the auditor should see that cash balance is exactly tallied, and where cash is counted in the presence of cashier and officer, the auditor should prepare a note and take signature of the responsible officer as well as cashier on that note, because they are proving what counted by the auditor. For verification cash at the branches, the auditor should call certificates from auditors of the branches, head office and branch. It this is the system applied in our country for expansion of the business. If the particular company or organization has a number of branches, the branch account of that branch account is maintained by head office. But in order to know that cash balance with the branches, the auditor should call certificates from the auditors of the branches in order to get exact idea about the cash balance with branches. Generally, a ceiling limit is prescribed for cash balance in hand. The auditor should see that limit is not crossed, and if crossed, what are the reasons. One important point, we can note that the organization's cashier cannot kept with the organization cash in hand balance more than the prescribed limit or ceiling limit. So the auditor should see that that limit is not crossed, and if that limit is crossed, the auditor should know what are the reasons for crossing such a ceiling limit. But in general way, the prescribed or ceiling limit should not be crossed by the organization of maintaining cash in hand. Cash in transit can be verified with the record, documentary evidences, and correspondence. Cash in transit means cash checks are certain negotiable items or documents are in transit. So during the audit period, some cash in transit that can be verified with the record maintained by the client, documentary evidences regarding cash in transit, and correspondence made by the client with the another party regarding cash in transit. If there are checks and drafts received but not deposited into bank and checks drawn but not issued, the auditor should inquire the same and if not satisfied, mention in his report. An auditor has required to make a report of audit work done by him. Basically, there are five types of audit reports, but in viewpoint of our syllabus, there are two types of audit report, namely clean report and qualified audit report. While verifying cash at a bank balance, there are certain checks and drafts received to the client but not deposited into bank. It means checks and drafts are in possession of the client but yet not deposited into bank. In another way, checks drawn by the client but not issued, actually check to for payment prepared by the client or drawn by the client but not yet issued. The auditor should inquire the same and if not satisfied, mention in this report. These are the two important elements regarding checks and drafts received but not yet deposited. That is one point. Checks drawn but not issued. That is another point. These are the things for which the auditor should pay and more attention and inquire about it. And if the auditor is not satisfied regarding this, he may mention in his report that fact. So, this is the procedure followed for verification of cash in hand. Now we are going to discuss another point of verification, that is verification of loans given. It means loans given by the client to another. Here loan means loan given by the concern to others. The following steps are necessary for verifying loans. The auditor should verify the loans given to others with the help of loan agreements and acknowledgement by the respective parties. There are two documentary evidence for verification of loans given by the client to other parties, that is loan agreement and acknowledgement of the respective parties. In case of loans given on the mortgage of properties, the auditor should first examine the mortgage deed for knowing the name of the mortgage, details of properties, amount of loan, rate of interest, and other terms and conditions. If the loans granted on the basis of mortgage, for that purpose, auditor should focus the mortgage deed and the particulars regarding it. If the loans are given against the security of investment, the auditor should inspect the investment and concerned documents. If the loans given by the client to another parties on the basis of investment, for that purpose, the auditor should inspect the investment and concerned documents. If the loans are given against a personal security, the auditor should find out the financial position of the surety. The auditor should examine the written guarantee and other documents. Sometimes, on the basis of personal security, loans may be granted. For that purpose, auditor should examine the financial position of surety and guarantee and other documents regarding this. If the loans are given against the security of insurance policy, the auditor should ascertain whether the policy is in force. The auditor should also ascertain the surrender value of the policy and compare the amount of loan with the surrender value of the policy and ensure that the amount of loan is proper. If the loan is granted against mortgage of insurance policy, for that purpose, the auditor should be alert and verify very carefully that the loan provided on the mortgage of insurance policy is proper. So, in this way, we discussed four items for verification here, and in this way, I am concluding my speech here. Thank you for patiently listening.